Hi, Michelle.
How about now?
I hear you.
I can hear you. Yay. Can you
Okay,
see
cool.
us?
Yes, thank you.
Woohoo.
Shalom, Michelle.
Hello, Bob. Who else is here today?
I'm here.
Jim is here, Julie's here, Daphne's here, and Roy is here, and I am here.
Okay, cool. Thank you.
I had to do the classic unplug it and plug it in again.
PD, right?
Appreciate
PD.
it.
Yeah.
They might be tied up. Are they doing the getting into the house? Takes me about 5 seconds with a credit card.
All right, Michelle, I'm going to try to share my screen. Let me know if that works.
You call PD or is it
All I
split?
see is me right now. What a joy.
Should we see if they have anyone else that wants to join us? I guess at this point it's not going to be helpful. Well, having another employee. All right, Michelle. Can you? No. I'm guessing you can't see my screen.
No, all I see is your initials. What are you trying to show me? Is it the document that you emailed us?
Yeah, how about now?
Or is it something else?
No, it's the document I emailed you, but it's the live one. So if I want to make changes, I can do it on the fly.
Okay, no, I do not see that, but I'm looking at the one that you emailed me.
Okay. Okay. Should we start? No one's coming from police? No one is coming from police. Okay.
They're the only ones we're missing.
I think just police.
All right, let's go.
Okay, so we had started talking about changing what the handbook currently says. The handbook currently is this first section, which is the 175.75, based off of the middle plan, which is Plan B. The thing that I hadn't been able to get done last time on the fly was how much of an increase that would be to employees that currently have those plans if they elect to keep them. So that's what this new column I is. So if someone on that middle family plan wants to keep it under the current handbook, it would be an extra $161 a paycheck, which is an extra $8,000 and change dollars a year. We had talked about maybe suggestions to the select board that we edit the number or make a suggestion that they change the number to 100%, 80%, 80%. And so I mocked that out as well. That would be an increase. These are the increases for the different plans.
I'm fine with 180.
Okay.
You're saying right now.
Can you just push that on so Michelle can hear it? No, it's okay.
So you're saying right now that you did 180, 80.
Yes.
The increase for a family plan for the middle plan
Yes.
is going to increase to the employee $6,460.
Not increase, that's the contribution.
Or is that the?
That's an
contribution?
increase in the contribution.
So
Increase, so the total is gonna be for the year is what?
Hold on.
Because what were they paying already? Jim?
Sep, so you,
Go, Jim.
Okay.
So that's what they're paying right now, 7,000?
Yeah.
And then they're gonna increase the
Well,
14,000?
no,
what they're paying, what they're paying right now is $893 because of the errors,
error.
the accumulation
I
of
don't,
errors.
I
Well, he-
feel like we shouldn't talk about errors because
I
it is
agree
a
with you,
difference
but-
of opinion about,
unfortunately, it's a
But
reality.
he asked the question, what are they paying now?
So-
So that's, how do you,
I don't think
But
you
the
can call it
narrative
an
of the
error.
reality, the narrative of the reality is different from different people. Because we found that the board voted that in and accepted that.
again,
And
now we're really
now-
gonna
now
go
there are
back.
other
in
people
But
who
time.
are
this,
That's
actually-
so
your
let's
opinion.
not, let's just say the employees are currently paying and
Yeah.
not get into why.
I did say that.
You said errors.
Oh, okay.
Let's just say,
You put the 2024 rates. You don't think that's like a really important issue that there was a rate increase in 2025 that never even got put into this. The employees never saw that.
right, so that's,
And the
That's
town.
what the- and that's
burden-
why. So when you say, when you jump on something and say, well, how can it be that even with changing the rates, we're gonna still pay $6,000 more a year? Yeah, well, because the taxpayers been like, it was so messed up. And
Julie, could you print out for me what the employees should have been paying based on the chart that I had printed out in the fall was? I don't know. They're saying that the reason this number is going up by so much is due to an error with the 2024 to 2025 rates. Do you have something that shows what the difference between the 2024 and the 25 rates
Actually,
are?
I want to know what the employees should have been paying if we had gone by the handbook and not the massaged way that happened.
So this is where I have all of it, but this is where I think it's important to separate the error that was made by the last select board using the 2024 rates in the chart instead of the 2025 from the decision that two boards in a row made to keep the current splits the way they were. Those are two different things that happened.
And I'm going to go back to, I want to go back to the governing document, which is the employee handbook,
Okay.
that said it was supposed to be 175.75. Tell me what the rates were that they should have been paying.
How would you like me to split up 175.75 between two
I want to know what
plans?
the rates should have been.
But between two plans, that's the challenge that we're facing.
Then, and we had those two plans, so you're gonna have to try to marry those up to what the plans that we have now to give me a snapshot of what they are. Because I wanna know what the total cost is for the employees. I see the $6,460. Is that the total cost for the employees for the year?
Which are you
I'm
talking
looking at your
about?
180.80.
That's the increase.
So what?
It
what
says
is
right
their
here, I
total-
tried to put increase.
What is their total cost out
I-
of pocket for the
yep,
employees?
I can add it.
Because that's gonna tell me what their costs are.
Okay.
'Cause I was lucky enough to print my 73 pages out today for my company, so I know what my cost would be.
Sure, that's fine. So again, I'm happy to go through the multiple of things that happened to get us here. I am not sure it is going to be productive at this point, since it's not gonna fix what we have in front of us.
I don't think that's really necessary. I mean, like Bob said, I think if we can see the number that was paid, the number that should have been paid if everything was coming out according to policy book and current rates, I don't think we need to rehash what happened or why it happened or how it happened or when it happened.
Yeah, I just want to know what the numbers are.
So again, the challenge with that is the board at the time, two boards, not just one, multiple boards, knew that there were only two plans, knew that the employee handbook said 3, and voted to keep the contributions the way they were.
Yep, and then, and the new board is gonna make a vote,
Absolutely,
go
but
into the new direction that we have.
absolutely, but
Be consistent with the employee handbook, and I'm in favor of making a recommendation to the select board to change the contribution rate, giving you know, you're still doing 100%, but then we're moving it up from 75% to 80%. I think that's good. I don't know where this 185 came from, but I understand.
That was another thing that we had mentioned briefly at the meeting. I just modeled it.
Okay,
We don't have to, you don't even have to look at it.
I'm not going to.
I knew that there was one other option. I couldn't remember what it was. There was one other option. I couldn't
And I
remember what
think,
it was.
I mean, I can tell you just from
Well,
looking at, my company does tiered plans based on how much money they make. So,
But I thought the
I don't know.
committee voted. I thought there was
I
a
thought we did
motion
too. I
made
thought
to
we
do
did.
180-80,
Yeah,
and
that's
it
what I thought.
passed.
That's
It
what
was
I
180-80. The sergeant, I believe, made the,
and then the only thing we were
and
here
I
today
think it was
Right.
unanimous.
Yeah,
is to look at how
I-
those numbers.
It was
pan out.
so, I thought
Okay,
we already
that's
agreed to
fine.
180-80.
That's fine.
Yep.
So,
And- And I
will-
agree with you that it's no, I have the numbers, but I don't see the point in going backwards in time either. I have
If
all,
it
anything
would
you
be
want to
helpful
know.
for Bob, for us,
I
maybe
can give
to
it to
sit
him.
down with him and
Yeah.
go through the
What's the total-
series of errors.
If I, that one that has the $6,204.84, that's for the couple, and the $8,376.66? Is that the total for the?
No, it's
How much
in-
are they paying for the?
Do you see how where it says increase right at the top of the column? I haven't
Yep.
added the new column here. I'm happy to add it right now.
Yep, I want to know what their total out-of-pocket cost is gonna be for the year.
Just hadn't gotten there yet. Okay, those are the numbers.
Uh, This is 100, that's 175-75. That's not what we
Correct.
voted, right?
Nope, we did the 88.
Bob asked about this. Bob asked about this 6204, so I assume that's what he was asking about.
Yep, and I'm gonna do the same thing on the next 80.
It's already there, right here.
So that's total cost for the year is, for a
7,665.
family plan, is gonna be 7,665.
That's
and
correct.
5677.
Correct.
So that's their total out-of-pocket cost.
Plus the deductible.
Yeah, I mean, that's, I can tell you right now, at my company, I can't get a plan with less than a $3,000 deductible. So,
Okay,
and we have some plans on here with no deductible, so, and then we have 1,000 and a 3,000, so I think that's fine. Yeah, 1,700 is the lowest deductible you can get for an individual. Family is 34,000, and it goes all the way up to 13,000.
But I'm trying to understand, really,
14.5.
we voted this. I don't understand, like, so what, we voted 180-80. I thought that was
I
to
just
give the
wanted-
board the recommendation for 180-80, and we voted it
Mhm.
last meeting.
I thought we didn't give any recommendations.
we didn't give any
No,
recommendation.
no,
because
this
I didn't
board
feel
voted
comfortable-
180-80. The sergeant made, okay, I was here. If it's
I was
recorded, you
here
can play
too.
it back.
I don't
I
remember.
thought
We
we
just
voted-
didn't have
Yeah,
No,
numbers. We just
the
didn't
chief
have
left.
numbers, that's all.
Yeah, the only
If
thing
y'all
we
feel
need
great
is
about these numbers, that's
No, we
fine.
absolutely had numbers. I showed them to the sergeant, and like,
and he called
The
Fremont.
reason he had some numbers.
Yeah.
You guys had some numbers, but there were other
Can you
numbers
just,
that were
so
requested.
that Michelle can hear you?
I said that we had some numbers, not all the numbers. There were specific things requested of Letty. She wasn't able to do them at the moment.
So,
But now we have the numbers.
yeah, so right now you're looking at, before they were only paying $1,300 for the year, for their policy.
Yep.
But how much how much for a family plan were they supposed to be paying? I thought it was $861 is what they should have been paying, correct?
So, no, so this is where it gets complicated, Bob, and I understand that you don't like this answer. I understand you don't like this answer. I get it.
Take the top plan and tell me if they were paying 25%.
Nobody was taking the top plan.
All right, the middle plan. Tell me what 25% is, because that's the middle plan.
How can you take the middle of two?
Take the second plan then. That's the one where the majority of the employees were on, right?
for family, yes.
For family, so at 25%.
But that used to be the third plan, and this is where it gets, this is where I keep on saying, trying to
Great.
apply
Then
a
take the top plan and tell me how much they would have paid for 25%.
$211 per month
For family or individual?
for a family.
That's what they were paying?
That's what they should have been paying.
That was the 25%.
No, that's, yes, sorry, yes, that's the employee contribution per month.
I thought it was gonna
They were paying $100.40 per month,
Yes.
is what they paid last year. This year, sorry.
And with the current rates,
The 2025 rates, they should have been paying $211.17 per month, which should have been $48.73 per paycheck.
Oh, sorry.
that math isn't working. How much was the plan for the year for us to pay for?
It wasn't for the year, so the invoice amount, meaning the amount that we got invoiced for the family plan, was 2885.86.
2885.86
Yep, yes.
per month.
Per month.
So your math isn't mathing, because if I take 25% off of that,
So you can't, so Bob, I'm gonna keep saying this over and over again, and I really need you to try to listen to me. The plan that they were all on used to be Plan C. The town dropped Plan A 3 years ago and didn't replace it.
Mhm.
They kept all of the same splits, meaning that the 75 that the other splits were based off of was the AB 20 plan.
right, so they should have paid $721.47 a month.
That is not accurate.
It is if I do a family plan, if I'm getting billed $2,885.86.
Bob,
It's simple math.
but you're not listening to what I'm saying.
Oh, I'm listening to what you're saying, and I'm saying the numbers we know are erroneous. So if I had to do somebody with the right numbers, if your total bill for the plan, for a family plan, was $2,885.
That was for Plan C.
Plan C.
But it's
what's
still
Plan B?
75%.
So we had
It's
a
not
plan-
based off of
It's not
Plan
true.
C.
You can't see again, and you guys are kind of arguing about something that is just you're each taking opinion on something that happened in the past, and you're calling it Plan C when I wouldn't agree with that because that insinuates there's an A and a B, and there wasn't. And
Well,
I think he's just trying to say if we are going to follow the handbook A, B, C, which we already the select board already voted this going forward. If
but this
that
is what I'm
same was done
saying.
in the past,
Jim,
this is what would have happened.
Jim,
And
you can't do A, B, and C off of 2 plans, is what I keep saying. And that is what Bob keeps trying to
No,
do.
I am not trying to do that. You're massaging that. I'm telling you, I just want the basic numbers. So the numbers that I would have for an employee, if an employee was paying for that plan for the year, if they did that one we were billed at $2,885.86, simple math. That's the 1 month charge that we get.
Yes.
And I take 25% of that.
But
That's
that is-
700.
But
that's-
That's not how the system was designed, Bob, because it was designed off of one single plan,
Mhm.
being the 175.75, and then that amount being applied to 2 other plans.
But if you look at that plan is now going to be the B plan, then let's compare apples to apples. So if this was the Plan B, which it is going to be next year,
Yes.
then his numbers are correct.
It would have cost an
But it wasn't
employee-
Plan B last year.
I know,
That's
but
all.
we're just saying,
I'm
if
just
you're going to
saying,
compare
apples to apples.
that plan at
It would have cost the
75%,
employees that much a year.
No.
$8,657.64 would
that's-
have been their share that they would have had to pay,
No, because
and they didn't.
if the 2025 rates were put in correctly, they would have been paying $211.
Which is incorrect. That's not 25%, no matter
It's
how much you do.
not
now.
supposed to be 25.
That's 7%.
But it's not,
He asked, he's saying it's not 25%,
I
and
agree
he's
it's not
correct. It's
25%. I
7%.
agree, but it's not supposed to.
It
by the-
wasn't, right, per the handbook, it was supposed to be 25, not
No,
7.
oh,
Well, I
But
don't know
can we
why
just-
why you're getting frustrated with me. Isn't that, I mean,
can we just focus on next year?
It's,
And
listen, the reason she's saying it is, and this is what I'm getting weirded out by, there's actual video that you can watch where they explained it, and for some reason, nobody wants to watch the video.
I've watched it 3 times.
Right, and Karen explains it.
Maybe we'll watch it with the attorney. You're wrong. There was nothing voted about A, B, or C, never
She
mentioned.
said that they were dropping the A plan in plain English because it was not being continued. You couldn't even keep it if you wanted to. They were dropping it.
And
because
yes, the
insurance
town had a
company-
2-year notice of that happening, absolutely.
Yeah.
Absolutely.
So they dropped that. And what she said was, there's no point in getting another A plan. We're just going to continue. And that's what she recommended, that we continue with B and C and leave them as they are
No,
and not.
no,
find
that's,
that
she
you
did,
paid
no,
more.
see, again, I'll watch it with you. She never says B or C, never says B or C.
I'm not saying that she's using that.
So,
language.
but
What I'm saying
then
is
don't
she's
say it. She
saying we're just
didn't
gonna
say
move
that.
forward with
She
these two
did not say that. And when she was at, when Mr. Kleiman asked about the increase, she gave him some bizarre answer that the higher deductible plan was more expensive than the zero deductible plan, which is
Agree with you that Paul did
financially
not
impossible.
agree, but then he got an
Okay, you know what?
explanation, and then
We're not,
finally-
you're not gonna agree on this. I think
Right.
we need to just,
I know, but
you
I,
know,
and I
take the
wasn't
next
gonna
step
bring this up,
forward.
but we all, listen, we already voted and the select board voted on the plans. This team already made a proposal to the select board. The select board voted, I believe it was unanimous, that of the plans of what A, B, and C would be going forward.
Yes.
They did. So I don't know why
Just-
you're arguing with Bob. I don't know
I'm
why
not-
we're going back to
I'm not
that.
trying to
I thought this meeting was just, and I
I'm
thought this
just trying
team
to make sure
voted
that we're-
10, 100, 80, 80. So like, we're actually going backwards now.
But, and I just want to point out that those employees who are on the ABSOS right now, 1K,
Mm-hmm.
are paying, even with the $100.40 or whatever the amount is there, are going to be paying, if they switch to Plan C family plan, they'll be paying less per month.
With a much higher deductible.
I understand that, but I mean, honestly, how often do you use your whole deductible?
If you're on a family plan, you might actually use it kind of a lot.
And I still think they're making out well. I mean,
I'm fine with those numbers as they're put up there.
Okay.
'cause that's what it is. It is what it is. So there's no massaging them more.
You keep using this phrase massaging.
I
I'm,
do,
I'm not
because when
trying to
somebody
trick,
has-
and I'm literally trying to make sure we're all looking at the same numbers, that's all.
Yep.
That's
And
all.
So me, it's really simple. What's it cost a month for the plan? 100% is what we're paying for the employee. What's the cost for a single plan? What's the cost for a couple plan? And what's the cost for a family plan?
So to be clear, we're not paying 100% for a single plan if they pick the first one.
Right, because we're paying that share off of the plan.
Yep, I just want to make sure that, so for example, if you look here for the
Go with the better plan,
3,000
they gotta
deduct,
have some skin in the game. I get that.
but it's the same thing with a single, so the single, because the amount for a single person for the 3,000 deductible is a lower number, that's still covered. For a couple, because it is more than what the town share is, the employee will have to pay the difference, and it is the same thing with the other one. But again, that means those percentages on that lowest plan are not 175.75. I just want to make sure that you don't, that you, you get that.
Yep. And
Okay.
then I would actually add another column in there, what the total cost is for the entire year for the entire policy.
That's right here.
Nope, you see how you have total employee per year?
Yeah,
Total town per year per employee.
okay.
So did you all say that this committee already voted to support the 180/80?
Yes, I believe we did.
Then what are we doing here today?
Just getting the numbers. That's what I thought we were doing today.
I thought the percentages were supposed to be done today.
I thought we already made
I
that.
don't know anymore.
I wasn't
we
at the
were
last
going
meeting, that's
forward.
why I'm
We were gonna
asking,
go back to
so.
the board with once we got this number sorted out, we were gonna go back to the board.
So to date, the select board has only approved the plans, not any rating, any
Correct.
percentages.
We're gonna
Correct.
make a recommendation to the board for the 180/80 is what I thought we discussed, and we were getting the numbers finalized versus, and then we're gonna ask them to change the employee handbook to be more in line with the 180/80. And I know Sergeant Spitaleri, he reached out to Fremont because his wife works at Fremont to find out what their contribution rate is, and it's 180/80 over there. So that's why we said that makes sense to be in alignment with the surrounding communities that are also doing the 80/80. versus 75.
So I don't
Right.
know if it's accurate to say that that is common in surrounding areas. Unless you looked at other,
No, but I can say that every single policy that I have in front of me right now, because I'm doing annual enrollment with my company,
is that with
everyone
the,
has skin in the game.
is that
There's
with
no
the
100.
municipality?
And Spitaleri said that 180/80 was in line with other municipalities, and he was I thought
Did-
he was the one who made.
Didn't somebody do a comparison on
Said
that?
I did.
Roy did.
And I gave the data for 40 or 42 towns,
Yeah,
and 30
I'm trying to pull it
plus
up
of
right
them
now.
were in Rockingham.
Hold on, I'm trying to find it.
And it didn't come out to 80, it came out to like 82 or 83.
Right, I think his point was that was so close, if that was the reason that someone left.
There are a lot of towns that do 85-15.
There are some that do 90-10. There's some that do 100. Obviously, that does not. There are
And probably some that do less.
Lee does 75-25. I think was one of the ones.
It
I
also
saw.
comes down to pay. I mean, if a town doesn't pay well, they usually give you better splits on the insurance. So, I
But
mean,
we already know we're one of the higher paid towns.
How do you know that?
But I think we also
Because we
need
already
to
have
look at how
spreadsheets.
many employees, is that included, how many employees are on the health plans in the
No.
different towns?
Sorry, Bob. How do we know that we're one of the better paid towns?
Because we have comparisons. I know Jim probably can pull some up where he did comparisons of what we were with fire. We're pretty high up on. I think we were second highest paid town. Greenland's the only one above us.
Well, but again, I'll just caution, I'm looking at appropriations.
Right.
I've
From
never talked, and I've looked at compensation ratios, but I've never
So you don't know
done,
like how much the
I've never done a salary
No,
study
that's
on
okay.
any of these
I was just
positions,
clarifying
no. And,
because
and I made that clear to the budget
I
committee
can
at the
tell you that
time.
I'm making 10,000 plus less than all the fire chiefs around me.
No offense, but didn't you just negotiate that rate?
No, I did not,
You just accepted it?
because I was handed it 24 hours before you were.
I'll disagree with you on that one because you were informed beforehand what the rate was going to be.
No,
Nope.
Yes, he was.
the whole board didn't see it.
Don't call me a liar.
I'm not calling you a liar. I'm telling you, I know that that discussion was had prior to the contract even being filled out. So if you want to have that discussion in public, we can.
Why is this meeting always stressful? Why does everyone have to argue? Let's just
Numbers
get back
come into
to
play,
the
people
insurance
piss around.
stuff.
So
I'm gonna make a motion right now that we go with the 180/80.
I'm understanding that that's already been decided, so my request would be to see this chart with the totals as Bob requested.
oh,
With the
sorry.
total,
Yeah, sorry.
oh, look, I see it now.
Sorry.
Oh, no, I see something, but that's not what I was asking for.
I know.
if
Sorry.
the-
This
the-
is
the-
this is
this-
the insurance thing that Roy was talking about. These are the splits for many of the surrounding towns, but that
Yeah, and there's always a lot of comparisons to surrounding towns
Nope,
for certain
that's
things,
fine.
but not other things.
Just-
So I mean, really, I think this whole meeting feels like a venting session.
Can you see this one,
if-
Michelle?
Yes, I can.
Okay, so I've added the total that the employee will pay for the year. I think that's what you're talking about, Bob, right here.
Yep,
And the total that the town will pay for the year.
that works.
Okay.
And I'm making a motion off of those numbers for the 180/80 that we make a recommendation to the select board for the 180/80 from this committee.
Yes, please check my numbers.
Yeah, I just want to. Yeah, yes.
Okay.
I confirmed it, like, those are exactly
Okay.
what I had.
And can you send that as a spreadsheet so I
Sure
can total it
can.
too? Because I'm just curious about that as well.
Sure can. All right, let me hide these. Okay. This just, so I guess everyone knows, this is what the invoice cost would be for the current election. per month for the employees that we have that take it. Then this would be for the year. This is the town cost at those splits for the month and then for the year.
Is that other one, that other column, is that the 80?
Which other
Or is that the
column?
75, the one
Which-
you said the 44,764?
That's none of it. That's the whole
That's the
bill
entire-
that we get from that's the
Okay.
whole bill we get for the month for the insurance company, or that we will, if this is the census at these rates
For each month.
for each month, and then this is for the whole year. But then the town will obviously not pay, I don't know what these.
I'm just trying to figure out why there's numbers included in there for the plan that we don't currently
Because those
have
are the,
anybody signed up for.
right here,
Yeah.
because those are what the costs per month are. There are currently 0 people that get them, so.
So I'm sure Julie, her calculation at the bottom, if you look at her nice little formula up there, just doesn't include any of those numbers.
Yeah,
Oh,
or
I see.
it'll just be 0, it's 0 times this and 0 times that and 0 times. Correct. Or 0 times.
And do you,
74.
do you happen to have what we paid for the insurance line last year at your fingertips?
Like what the bill amount
Just our,
was?
what the,
or-
what that line, what that budget was for health insurance benefits.
I
I'm
know
just
what the-
curious to see the difference between, what the difference is gonna be in dollars.
So, that is not.
And
what
if you
the
don't, that's
difference-
fine.
So,
but-
no, I do, but I will say
One-
that I don't think
The
that that is,
appropriation line, how much the appropriation, is that what the question is?
I think that's what the question is, but before I
Fi-
answer that,
I have that. I have the appropriation.
okay, you can answer it and then I can
Uh,
add my caveat after.
Actually, before you answer that, so this census that you have, this is what people are signed up for 26, or is this what people?
No. we
This
got-
is what the current staff is currently elected for 25.
So there may be changes for 26,
There
then
may be
people may choose a
changes.
different option.
There may be
Okay.
changes and hopefully we're gonna hire some more people. So typically in this budget, there is a couple extra families as placeholders. I think, Bob, you've mentioned that before.
Yep.
The board may wish to have more than a couple this year, knowing that hopefully we're gonna hire a lot more people for downstairs. But this is just what the invoice would be for the current employees.
Yeah, I think we had $94,000 extra last year in appropriations.
I think it was tied to like 3 families moving in, or like it was tied to,
Correct.
it wasn't a
was three.
random
It
number.
was
It was 3
definitely
families, I think.
It was 3.
And I'm sure that there will definitely be changes
in the
between,
elections.
yes, on the elections,
Oh, I see.
Yes,
Sorry,
I would agree with that.
have-
myself included.
Yeah.
Hold on one second, let me just.
And I think that's what we talked about last time, that how you go from the 0 to the 1, you know, with the 80, because it came up when we were talking about the 1080. Like if a person on the family plan of the 0 deductible this year now says, well, I'm gonna have to go. to
There's
that.
nobody on the family plan with a
1,000.
0 deductible.
Okay, so hypothetically, all right, so let's say the couple, because there are people on that one,
Mhm.
that if I go to the next plan down, I'm gonna have to have $1,000 deductible. In the couple plan, I'm gonna save $1,800 over what I paid last year. We went through those numbers. And if they go if they're currently on the family plan of the $1,000 deductible, and they want to go now down to the $3,000 deductible, they'll save $306 a month.
With $9,000 in deductible.
Up to.
to.
Yes.
Okay, I
That
just,
is-
I understand that it is not guaranteed, but it is worth
Well,
mentioning as a,
absolutely.
for that
Well,
family.
when I said yes, when that's what, and so when I didn't, yes, that's true. So when I did my insurance today, I did it actually with today.
no, that's okay. And then the only other thing that we didn't specifically outline, but I want to make sure everyone agrees with, is we picked the 1 dental plan instead of of having 2.
Yes.
And per the current handbook, we pay for the single person. It doesn't say what the split is for the other two, so I just use the same cost
I would
for
do the
all
split. Yeah.
three? The split or the same?
I would do the same,
Are
whatever.
you,
I think
Is
we
it-
just pay for.
are you sure? The way the handbook.
the
is current-
difference.
The handbook currently is written that we pay for the employee, and the
Right.
employee is responsible for any dependents. That's all it says.
and the employee is responsible for, oh, so if that's. how-
So then Letty's
I
chart
wouldn't
is
change it. I
correct
would
then.
just leave
Yeah,
it
leave
because
it.
they're gonna be getting it cheaper.
Yeah,
It's cheaper, but
Yeah.
I wouldn't change the handbook on that and confuse it because it just gets more complicated.
That's fine, I just wanted it to make sure that,
and then the other
Oh,
thing is.
I just was clearly articulating what the handbook says. It says
Mhm.
we pay
The
for
other
the
thing that
employee.
we, I think, should discuss is the zero deductible plan. This won't apply, so it'd be an NA. But do you want to contribute to the individual and family plans for the deductibles, a $500 to $1,000? Like
You mean the two?
500 for the, right, so like, you know, the employees get 100% from the first plan, from single, but if you go to a couple plan, I guess I'll put it that way, do we want to recommend $500 to be paid towards whatever the HSA, HKA, whatever it is?
So
And
if-
$1,000 towards the family deductible.
I mean, I was all for doing that sort of stuff until I saw, like, again, realized that it has to do with the high deductible plans that are none of these ones that we have here, right? They were those
Okay.
green ones, and it just didn't make sense. So
well,
Okay.
but it might make sense if the town is gonna end up doing that. This is why maybe we keep meeting for next, so we don't have to rush on this for next year.
yeah, I agree with that.
Because if I remember correctly, all of the all of the savings plans or whatever they're called, all those different lettered plans, they all expire at the end of the year.
Yeah, use it or lose it, but you can use it towards medicine, you can use it towards,
Sure.
I can use it towards my test strips, I can use it towards my medicines. my
Is it a prepay? So the other question is I don't know if they're
It's
prepay
preloaded.
or some of them are reimbursement. So I think that's not a bad idea. I just would want to know more about what Health Trust offers. And what we
Yeah, I
could
think
do.
that, I think for this, for 2026, I think that's a good thing to consider for next year, not for 2026, but to implement for next year.
For 27,
Yeah.
Yes,
okay.
And I would
because I
bring
think
that
at this point, plans have to be things need to be decided now, during this enrollment period, and whatever change is gonna be made, I think adding another level of change and fusion is not necessary right now, my opinion. But certainly something to discuss for next year, for 27.
Yeah, I think given that the cost to the town and employee for the high deductible plan as defined by the government, not being that different from what this kind of high deductible plan is, it would be worth considering whether or not that's something we want to do.
And I think, like you said, if we start earlier next year, it'd definitely be beneficial. Even bring back the going direct so that we can better as a group evaluate that. We didn't have enough time, and I think that ties into these HSA, HRA, FSA things too.
Mhm.
We just would have
Well,
more
the
time.
problem is that these places don't get the rates until.
Right, but what I'm saying is even if we had to look at it comparing 2026 rates against each
Mm.
other, at least we as a group could think like, does it make sense? Because, the whole like being self-insured thing, there's always that risk, and I'm a little concerned that I know it wasn't Health Trust this year, but again, if there's some way of getting that risk mitigated, but still have good insurance and not having employees in town paying a lot, I think it's a good thing to do. But again, we didn't have time to even evaluate it properly.
I'm seeing that on this, I have these two, and I'm guessing that these are Medicare plans. Looks like prescription plans. Do we have anyone that currently takes those that you're aware of?
Are they required? I guess that would be my other question. Once you hit a certain age,
Well,
are you supposed
We
to be
used,
required?
I mean,
I can check in with you about that.
I just think that perhaps the employees who would be eligible for that aren't really aware of them, and that perhaps they would switch to them.
I'm
Are they
just-
legally required?
Well,
Social
I'm
Security?
wondering if there's zeros because of last year or this year. I can,
Jim, are you required once you hit a certain age to sign up for Medicare? Since you're retired? Oh, you retired,
not.
okay, sorry. I thought you were,
I have to pay for my own
so you're required at
insurance.
65 to sign up for it?
No,
No,
No.
no, you're not.
Social
As long as you're
Security, I believe, is like
working,
70, right?
yeah, there's definitely
I think
rules
there
about
is an
Medicare.
age
There's
that you are
definitely,
required.
I have a friend who's 67, but because if you're working, there's stipulations.
you can't, none of you can
But,
see my window, the window that I'm typing
No?
in right now,
No.
right? Okay.
The only thing I see is a spreadsheet.
No, that's,
No, I have to buy my own insurance. I did that today.
Well, I'm looking at mine.
went up.
Mine was from the 3rd to the 21st, which I don't usually get. I get it from my wife.
But he kept me the same cost. But now I don't get any more co-pays. I have to pay the whole thing now if I go to a special.
Yeah.
Whatever. It is what it is.
No, I made a motion. I didn't see a second. Someone's gonna make a second.
oh, I'll second.
what was your
For
motion?
the 80, the
180.
80 to
It
present
sounds like
those.
we've already,
I
okay.
thought that you already did that.
No, we never.
Well, we thought
made
it
a
was voted
motion.
on at the, it's questionable whether it was voted
I
at the
made a
last
motion,
meeting.
and then now we have a second.
Second.
Sure. Can you come up and, just so Michelle can hear you? Don't be sorry.
Okay.
What is happening?
Katarina speaking.
Katarina's talking. You can't see
Oh,
us again?
I don't see anything, so I'm like, well,
Camera on?
Weren't you
Oh, it
seeing
is.
us? Oh,
It just says CC.
but that's every time I try to turn
No.
the camera on, it shuts it back off again. So,
I can at least see the spreadsheet now, so
Great.
that's
you know
something.
what? We're making progress.
So you guys have decided and you're about to vote on 180/80, which means 100% for individual, 80 for couple, and 80 for family, to be paid on the 1,000 deductible plan. Is that correct?
That would be recommended to the select.
Yes.
Select board would vote on it, but yes.
Okay. And then how are the other two plans calculated?
It's the same dollar amount from that middle plan applied to the one above it and
So
below
that
it.
continues, as you said, per
Yeah.
handbook, you want to continue that?
Yes.
Okay.
Well,
So,
we would make a recommendation to change the handbook from 75 to 80.
correct, okay.
Those would be the two changes. So we would actually give 5% more
Yep.
to the employees versus sticking with the 25.
So per the calculations, does that make the employer contribution for the non-deductible plan 67%? Is that about right?
Please hold.
And the other one, I come up with 96? The new plan that you want to add?
Right.
You want to add a new plan with the 3,000 deductible?
Yeah, I think she's doing a
Percentage.
percentage.
Or we can do cost, it doesn't matter.
Well, I ask your question again
Ye-
because I want to
yes,
make sure I'm
you-
just
Correct?
So it's,
Because
so
you're
you're saying,
using the amount.
you're asking for the zero deductible plan?
For a
the single,
family?
it's 85, 68, and 68 for the couple and family. Is that what you got?
1K deductible, yeah?
Yes.
Okay. And because you're using the amount that you're contributing,
Mhm.
the percentages for the other two change.
Yes.
Correct.
For the
Yes.
top plan and the bottom plan.
Yeah,
Yes.
so if
The
you take,
bottom, the new plan that's been added.
Right, the new plan
Yep,
that's been
3,000.
added. So what's the percentage for the last?
a
one?
197.97.
So
Is that what you?
I have
you-
96, but close enough.
Yeah.
That's round.
So, and you're not willing to discuss because you do not have time, any help with the deductibles for the employees? Because what I wanted to say is regardless how you look at it, I was listening to the initial discussion of it was a mistake versus it was a decision. And I have voiced my opinion also how I interpreted the video and the minutes and everything else. regardless of whether it was a decision or a mistake, the reality is that if I, for example, wanted to stay on the same plan and not change plans, if I went with the corrected 2025 rates, which you guys don't agree on either, but Letty said 211 for the family plan for 1,000 deductible. That's simply correcting the rates, not the contributions. Okay, so if we only can correct the correct rates, not the 75% contribution changes. Last year, I paid only $100 a month for my insurance. I agree that I should have probably paid $200 a month. So thank you for the town for picking up that tab. But whether we go with 100 or 200, if I want to keep the same plan, I have to pay 630. Is that correct? I can't see your numbers on there.
638.76.
So that's either a 600% increase in reality, like truly it's a 600% increase. If I understand that I really should have been paying at least 200, that's a, 300% increase. And I would like to quote the Butcom chair from article that says, your hope is to lower overall costs to help both taxpayers and employees. So even though you decided to up it from 75 to 80, it's for a different plan. So you're hoping to overall, help cost taxpayers, employees. This year, you're not helping employees with this one example, and I'm sure there's many others.
What's your current deductible?
$1,000.
$1,000? And
Yes.
so if you stay with a $1,000 plan
I would pay $630.
for the single plan? But that
No,
would be
the family plan.
Family plan.
for the family plan.
So $1,000 per person, maxing out 3 for the family, I believe.
Plus, total out-of-pocket is actually either 8 or 10, I don't remember now.
Yeah.
Because there's other costs, co-insurance, deductibles, and everything else.
It's 10.
So,
Maximum out of pocket is 10.
so both of these plans, and especially the $3,000 deductible one, is actually comparable to what's called catastrophic plans. The only difference is that both these plans and the catastrophic plans pay for preventative care. This plan would pay for a couple other doctor-type visits. But total possible out-of-pocket expense is the same. So if all of that is on the employee, I would not call that hoping to lower overall cost for both taxpayers and employees. I would just like you guys to consider that. And the reason it's so high is because of the small clerical error about sending the employees the actual cost for 2024, which I calculated based on the number of employees that you guys had on one of the charts that was made public. $11,300 was the clerical error. The rest of that 96,000 or something that the chair presented was based on not really agreeing how the contribution shifted between plans. If you lose Plan A, you have to have a discussion about adding a plan to the bottom and shifting everything over, because then you're paying more for less coverage. I understand that we don't agree on that, but we lost Plan A that was on top. We are adding plan to the bottom. That's this board's decision that we can't stay with the 2 and with the contribution we have. That's why that cost is so tremendous. And it's 50% or 100% or something, 50% for a family plan for the no deductible. So if anybody's on that plan, which there's at least somebody, I guess, that's also a huge increase. with that amount. You would go from 841, which they actually paid, or 891, which they should have paid, to, where are we? 1,200?
Are you talking about compared to 2025?
Yeah, 25 and 26. So the actual increases for employees, if they want to stay on the same plan, are huge. I understand that you guys, this board and this, most of this committee wants us to move us to a different and cheaper for the town plan, but that has deductibles. And if you want to incentivize that, I would ask that you consider those deductibles, contribution to those deductibles somehow. I think you still have time to research it and try to figure that out to help out a little bit. Oh.
Yeah, I think the question just becomes, is that at that point, I guess, in my opinion, I want to leave the select board to still make some choices, right? Like, we're making recommendations, they cannot take our recommendations, but that might be a good place for the select board to get involved and say, we would like to make contributions. I was just looking at the calendar, which is a
Well,
little.
I mean, if you look at it, you know, you had what, 27 employees, 25, 27?
Yeah, but that's made up, because I don't know how many people actually don't take.
Well, let's just
Insurance, but-
factor it in at, let's say it's 27, right? And we
Okay.
say we're gonna do 27 family plans. The most we would be budgeting for would be if we did $1,000, we could do an addendum to the handbook.
Mhm.
The select board can do that. And they say, we're doing an addendum, and we have to do an addendum anyway to change it to 180/80.
Mhm.
As you say, I'm gonna make an addendum that we're gonna contribute $500 towards, because we're already doing the 100%, so $500 towards a couple, or $1,000 towards the family deductibles
For the
is an incentive.
$1,000 and the 3,000, or just,
For the $1,000 and the 3,000, if they choose those plans, we will pay $500 towards the couple and $1,000 towards the family as an addendum if they choose those policies to go towards their deductible. Now, that could be paid at the end of the year. It can be paid at the beginning of the year. It can be paid in the middle of the year.
that's where I think we have to check with Health Trust to see what we're actually allowed to do.
Well, I think, I'm almost 100% sure we can do a health reimbursement account
Yeah.
where we just have to say what the limit is, so they would reimburse the employee up to 500 if we go with,
500 for couple and $1,000 towards family. And now the deductible of $1,000 really becomes zero because we're already preloading it to 1,000.
I don't think we can do that, though. Wasn't there something that one of the things said about, am I making this up, Jim? One of the things said that we could only pay for half of the deductible?
That's with a health trust.
This is with Health Trust.
Yeah, that's what, health
Okay.
trust said we could only do up to 50%.
Up to 50%? So we
yes,
do an addendum on that too. If they choose $1,000 deductible, then the most we're gonna pay is $500. Do $250 and $500, and then on the $3,000 deductible, you do whatever we can do, vice versa.
You could. I mean, and again, I'll just address, Michelle and I, we created the health insurance sub-team to look at exactly what you said, to try to see if there were ways to lower the cost for the employees and the town. I don't believe anything that this group is doing today has anything to do with that, because Michelle and I were looking and talking to Health Trust and the town administrator. That's when I believe we uncovered this discrepancy between handbook and plans and the cost. So all this has been about, how do we get the handbook and plans back aligned together? We did have someone come in from the outside to talk to us to see if we could save money for employees in town by going direct, but we just don't have enough time to investigate that. So I feel like trying to say that what's happening here is because of this isn't about saving, I don't think this is about saving money for anything. I think right now, I'm just trying to see if we can get this thing back to how it was supposed to be. And again, I went over this with this team that the New Hampshire Fiscal Policy Institute had just come out with 2 weeks ago, that in the state of New Hampshire, the average family has, and this is everybody, so anybody who lives in New Hampshire, the average deductible is $4,335. And the average employee, expenditure is 4% on a 45 deductible plan. So when we're talking about paying 80%,
Average, where
80%.
among,
Sure, yeah. Yeah, because I just did my average
average
of my,
of
it's
what?
just New Hampshire, you need to look it
municipal
up.
workers?
No, it's everybody.
Okay.
Any resident in New Hampshire, it says their average is $4,335. And you're right, some are higher. Mine is 75. I just did mine today. I'm 7,500. So, an average is in the middle, but so.
I thought we were gonna try to compare averages between municipal employees at minimum. And
And-
also, I would like to say, you just said that this meeting here is not about trying to save money to the town and employees, but
No.
that quote was from the 10th. That's,
I'm just saying,
couple
like,
days
I'm
ago.
trying to tell you, like, I started the health insurance sub-team with the goal of looking to see if we could save the town and the employees money. All of this discussion that we're having today on Plan A, B, C, and changing the percentages, it really has to do with trying to get us back
So
to.
Jim, I think what she's trying to say, maybe, is the town is saving money with
No.
this scheme and the employees are not.
Oh,
It's not a
absolutely.
scheme.
It's,
With this
yes.
arrangement?
It's
scenario?
100%, you're absolutely correct.
Plan.
You're absolutely correct.
Okay,
There-
I think
there's no
that's-
doubt that the
that's only point that
contribution,
she was trying to
that
make.
the contributions for the last 2 years have heavily hit the taxpayer over the employee. And what's happening now is because we're putting it back to how it should have been, yeah, you're seeing a big jump in
Jim,
1
I'm just
year.
gonna
And
be
I
really
do
careful
feel
when
like
you say should have been, just,
I do feel like we took the time to look at the brokers other than Health Trust, and there were things, there wasn't a huge savings. They couldn't offer a no deductible plan. They couldn't match our prescription plan, come close, as they said, to matching our prescription plan. So I do feel like we did our due diligence and
Well, and the other thing
looking
you
at-
had with some of those brokers is it was all age-based for the most part.
Right.
Which is a major problem
right.
because we have such a small pool. And then the other thing that comes into play is like the Medicare, which, that was one of the conditions. And I can tell you, even in the private sector, they got right in here. If you have Medicare or will become eligible in the next 12 months, federal law gives you more choices because they have to go to the Medicare plan. So I don't know what age they become eligible for that because it doesn't tell me. And I'm not there, so it doesn't flag for me. Is 65?
speaking of ages, another interesting piece about that catastrophic insurance that I mentioned is it's only offered to people 30 or under, and only with exceptions to older people, because they take that expecting not to have to pay for any of their amounts. And again, it's capped at 10,000 for individual. So we're all older. I can't qualify for the catastrophic plan, so I have to take this catastrophic plan. And I am much more likely to be paying that deductible. So I'm sorry, this is, that's why I'm here at this meeting, because I was hopeful that there will be at least an attempt. November 10th, we're hoping to lower cost for employees. And sorry, I'm not seeing that at all. 600% increase.
If you go
S-
with Plan
Right, but
B.
there
If I
are-
stay with
there
my
are
insurance.
options that are,
Okay, so
Nice.
let's say that I switch to the plan where I would pay about the same amount, right? Now I have up to $9,000 deductible. So how is that any savings? And I am not 30, so I will be using
Is
that.
that a 9,000? I thought it was a 3,000
Three
three per
Per-
person.
per
person.
person. Okay.
So if
So
I
it's
have
3, 6, or 9 for the family.
of
Okay.
family of 3,
And then just the out-of-pocket is still only 10.
and there's a couple other differences between those plans. The copay and coinsurance are higher for certain things. So there's additional higher cost for that plan. It's lower premium, but much higher cost. So, and it's lower premium for the town. So by shifting all this premium cost to the employees, you are gonna push them in the lowest cost plan for you, and then they will be paying everything out of pocket through those deductibles. So I'm really disappointed in
So
something
if-
like
I
that.
just want to make sure, you said if we go to the employees are forced to go to the $3,000 deductible, the town's paying 97% of that, right? Almost all of it?
But the plan overall costs less. The plan costs.
It's going to cost the town.
No,
the
the
same.
town, but the town's
It-
paying the
the town's
same.
gonna-
Yeah,
It's just going to cost the employee more, though.
the town is gonna, on a
Okay,
family
sorry.
plan, the town's paying 25.55, right? Regardless. And the
No.
town-
But wait, when you say, you're not talking about a percentage.
I'm talking dollars.
Okay, sorry.
month.
I wasn't,
The
I
town's
wasn't,
gonna pay 2,555.
I wasn't looking at the same thing you're looking
25.55.
at. And so when
I'm
you said
sorry.
25.55, I thought you were talking about percentages again.
So whether the employee takes A, B, or C, the
All right.
town's
Still pay
paying,
the
the
same
the
amount.
town's paying 25.55 on a family plan.
So I
And
guess,
I think we did, that's why we went, we had the discussion last week, and the sergeant was spot on when he said, like, I think if we can at least get it to 80%, because that absolutely lowered the cost for employees.
And the other thing you guys are not considering by sticking with the employee handbook 100%, and that's the Bible. The only thing you're willing to change is the 80% instead of 75. The other thing you're not considering that all these plans increase differently year to year. So the insurance companies choose the cost of the plan based on experience, I guess. So, for example, I don't have the rest of them because I did not have that information previously. But just between 25 and 26, the cost went up only 5-point-something% for one of the plans, and it went up significantly more for the other.
Mhm.
I don't know where that is. Do you have that readily available?
Industry-wide, I can tell you right now.
It's almost
industry-wide,
double.
They're going up 11%.
it's going to be variable.
On insurance.
Yeah.
Last year it was 15.6 or 16.5, something like that. Industry.
I agree with Letty that, let's let the select board decide if they want to.
I'm just not sure this group is going to be able to come to a conclusion in a timely fashion before.
Well, I think if
We
we're
only have
making a
1 week.
recommendation for the 120/20, or 180/80.
Oh, yeah, sorry, this is the wrong thing.
If we did the 180/80, that's the recommendation, we bring those numbers forward, and we compare this, you're gonna have to show the select board the 175/75, what the cost is to marry up to
Yeah,
what the
leave it.
handbook says.
Leave it like this so
Yep.
that they can see both?
I can see
Yep.
both. That's what I would recommend.
Yep.
That's my motion.
And then they can decide if they want to do an HRA or.
Should this committee also recommend to the select board that they consider an HRA contribution? Or of some further contribution, but leave it up to the board about what that might look like or the amounts or anything?
Or, yeah, just recommend
tell
that they
you-
consider it.
I can tell you, I'll be bringing that up to say, if they go with Plan C, for example, we should be contributing towards that deductible plan.
Yeah, I wasn't sure
Yeah.
if it was more meaningful coming from the whole committee.
Depends. Right now, we have the motion for this.
Yep.
Then we can make a motion for that.
Okay. Who was the second? Was that you, Jim?
That was me.
Oh. I wrote J. Got that far. Okay. Is Daphne coming back?
I think she's gonna be tied up with them for a while. The son showed up, so she had to go. for
With a
that.
key,
I
hopefully?
think to get them or do something.
Okay.
Can I mention one more thing?
Sure.
when we met with Budget Chair and came up with the idea of the committee, which I'm very thankful that you guys even considered, the discussion was that there would be 3 members from combined Select Board and Budget Committee, and 4 to represent employees. By the time it got to the Select Board, it was the other way around. It was 3 and 2 from each, from Select Board and from Budget Committee. And now we have the 4, 2 from BudCom, 2 from Select Board, and 3 employees. You guys have added Julie. You're missing the 2 other employee representatives. So as of right now, you have 1 employee representative.
Typically on a board, well, no, we have 2, because Julie's from the town also. Daphne just had to step out, so we're only missing the police, but we have a quorum, so we have enough to make a vote.
I understand,
So on
but
any
Julie
board,
was
yeah.
not even in the original.
Well, we didn't have a town administrator.
We
then.
didn't have a TA.
I
But,
understand.
We would have that.
Chris last week certainly showed his support for the 180-80.
And the whole reason the
It was his
180
idea,
came
it
up-
was his
Right.
idea,
Right.
actually.
It was
his
the only,
idea.
otherwise we would.
Because
I
he
would've
was,
been
he was
stuck at
talking about his
75.
own people and risk that he felt that this would keep them and not have them quit. There was the whole reason why he said
Right,
that.
right.
And I was
He
talking to him
recommended,
directly
because
about
we
that.
were talking about the 175-85, and he recommended the 180-80.
So we have a motion, we have a second. I'm gonna make a motion to move the motion.
Any further discussion? Roy?
Nope, I'm on my island, so there's no point.
Okay. All in favor?
Aye.
Aye.
Opposed? Or Michelle?
Oh,
Michelle's still there?
She is but muted. She might be on the phone. We'll wait a minute. Opposed? Abstentions? You didn't vote, Roy.
I'll do opposed.
I don't know what to do about Michelle. Well, it's not going to make a difference in the vote unless she. All right, so it passes. That's fine.
So that goes to the board as the we're gonna have the 175-75.
I'm gonna
as our recommendation.
I'm gonna give them this exact piece of paper
Okay.
and expect their eyes to glaze over. But there's nothing else I can do about it.
And then if you want, I'll make a motion that we propose to the select board that they do something for the deductible as a annual funding
Just,
contribution
yeah,
towards.
I mean, I would, yeah, just something. The board can decide,
Contribution.
the board can figure out what it is.
So
something.
an annual funding towards contribution towards the couple and the family plan, because the individual's getting,
Yeah, and I'll reach out to our rep at Health Trust and just confirm with him.
Actually, we might also be able to use that, oh no, because it would, never mind.
To find out about the HRA, HSA.
yeah, find out the percentages. Find out.
Yeah.
FS,
and
is
the-
there an FSA? There are many letters.
Yeah, there's an FSH, there's an HSA.
There's
and
an
then
HRA.
There's an HRA, so there's 3 different
All right.
ways you can go.
Who seconded that?
I will.
Any other discussion?
This is to recommend looking into how we want to help with the deductible.
To do
If the board
a
wants to.
contribution towards their deductibles.
On all of them, or just the 3,000, or?
That's
Well,
the-
it would be
for the board to
1,000
decide.
3,000.
We're
Oh,
just-
that's,
we're
I was
just
just wondering
recommend-
what I'm voting on, that's all.
Just to have.
Just to
ask the-
recommend.
to
Oh, sure.
recommend that the board look into
Understand.
it,
Okay, sure,
Yeah.
yep,
consider it.
yeah, yeah.
That we consider that as an offset to.
The expense, additional expense.
Right, because they're gonna have
Mhm.
additional expense if they go with that $3,000 deductible.
Right,
How much do we want to contribute towards that?
Right.
If they go with 1,000, if, like you said, if we're limited to 50%, and they have $1,000 deductible, most we can pay is 500.
Right.
If you go to a 3,000, the most we could pay is 1,500.
Mm.
So I would make a recommendation.
Per
for-
person.
Yeah, so I would make a recommendation, though, to offset that, I would say, I would do the 500 or the 1,500 towards those.
But we'll leave it up to the,
Leave it up to the board,
Yeah.
but that would be from the board. I would make that, I would be pushing for that, is what I'd be looking for.
But that's not what you're voting on right now, Jake.
no, we're just,
We're just making a motion that. it
that they
go-
at least
that's-
consider it.
We consider that to the board.
Okay. Does that answer your question? Okay. You have any questions about that?
Nope.
Michelle, she's probably on the phone. If she's not answering, she's probably on the phone.
So I would say that, like, just simple math for me, if I have 25 on there, it would be $1,000 average. It's gonna be a $25,000 adjustment towards that
Sure.
overall.
Sure. All in favor?
Aye.
Aye.
6. Opposed, abstentions. It's actually only 5 of us. I counted myself twice. And maybe Michelle will come back. Okay. Anything else?
Motion to adjourn.
I have one more question.
Sure.
How quickly, because I only have paper here with me, could you figure out the cost savings if you went with, you still have on the board, did you just say 75 is also still in consideration?
Well, it
No, we
depends
just-
on what the,
75,
Select board.
so.
Up to the select board.
75 is what the handbook currently says.
Yeah.
So the recommendation from this committee is that the select board change it to the
80.
80/80.
Okay.
So what were you asking?
The question was, if you keep the same enrollment,
Yes.
I know it changed, but if you kept the same enrollment that Mr. Hajar was doing the cost to the town because of the,
Hold on, pause. I want to make sure I understand. We have the costs to the town of the current enrollment? Are you talking about something different?
so the whole thing that started this
Mm-hmm.
was the decision by budget chair to look into it and see that because of what he calls a mistake, the town lost $96,000 just in 1 year if the book was followed, right? So if he used his same enrollment numbers that he calculated that cost with
For 2020, for
for
2025?
2026, if we took these numbers and applied them to the new plans, what are the town savings now? I know the enrollment's different, and it will probably be different because of people will pick different plans. Is that
You mean how much
too
less?
hypothetical?
How much less is the town paying
In 2026?
than?
Never mind.
I think you have it.
I-
Do you have that?
Maybe I just don't understand what the question is.
Based on current enrollment.
This is current
N-
enrollment,
Not current, you lost people, but like current, like,
current-ish.
Elections?
the numbers that were shown.
So
like,
this is,
twen-
so.
In 2025, at some point, we had 7, 4, 1, 3, 1,
So
and 6.
I have the same elections that we have right now.
Yep.
I mean, I guess you're trying to compare two numbers that are the same
Ye-
things.
Do you know what I'm asking?
I think so. It's 37th, so we're gonna argue again about what the town should be contributing
No.
currently.
We don't have to do this. now.
Okay.
I'll just do it myself.
It's about $1,000 a month, maybe. $2,000 a month. Maybe. If I'm understanding what your question is.
Okay. So I had a motion to.
Thank you
Cool.
for
Yep.
letting me speak.
Yep. Bye, Michelle, assuming you're still there.
Did we-
Second to adjourn.
All in favor?
Aye.
Aye.